All right, everybody, welcome to another weekly market review. Okay, we got some interesting things that have happened this week, so let's get straight into it. As usual, this is our disclaimer. Okay, so this is not financial advice. Any opinions, references, or assertions that we may set out on our social media or otherwise is just our own personal views. Okay, so again, very interesting stuff this week, guys. We have a major crypto player, all right, that is suffering from the fallout of FTX. So Silvergate Capital, which is one of the major lenders in the cryptocurrency world, okay, said that it would actually close up shop and be winding down its bank. So this comes, after the whole fallout of FTX, and they are saying that they will repay all of its deposits, but didn't explain how it will resolve all the claims against the business currently. Okay, so again, this comes in the wake of them delaying their annual financial report and also warning beforehand that it could fail. So again, they're also going to be facing several other regulatory probes. Okay, so again, guys, this is a very major fallout in the crypto world as well. Okay, and with this going down as well, a lot of people are talking about how USDC, which is one of the stable coins if you're in cryptocurrency, is not safe, and there may be some issues coming along with it as well. Okay, so again, one major event that happened and shook up the markets a little bit, right? So this transpired into some volatility into the markets because of this fallout. Okay, another major event, sort of something that no one could predict, was this, right? So Silicon Valley Bank, again in deep trouble. So the shares plunged massively. The bank has been around for a couple of decades. So for those of you that don't know Silicon Valley Bank, they are your bank for tech startups. Okay, and traditionally how a normal bank works is that they collect your deposits and then they loan out that money, okay, and then they earn based on the interest or the difference in the interest. Now with Silicon Valley Bank, it's a little bit different. They cater to tech startups. The deposits that they collect, they went to go and buy treasury bonds. Okay, so treasury bonds was something that they bought. And the unforeseeable thing was that they did not expect the Federal Reserve to hike up rates so aggressively. Okay, so if you do a little bit of deeper research, the bonds that Silicon Valley bought was about 1.5% yield. But right now, if you go and check the yield on the treasury bonds due to the high interest rate, it's at about 5%. Okay, so again, nobody could have foresaw how aggressive the Feds were going to go about this, but they're literally holding onto these bonds. And another thing that happened was that a bank run started to occur. Okay, so for those of you who don't know what a bank run is, basically massive amount of people going in and withdrawing their deposits and withdrawing their money. So if one or two people do this, it's fine. But the fact that you have a majority and large amount of individuals that are doing this, okay, it doesn't look good for a bank, right? And then its liquidity also ends up tanking as well. So because of all of this, all right, nobody could have predicted something like this. But because of this, right now, shares have plunged massively for this. Okay, investors are very worried and running for the hills. Very simply, again, it's looking like the collapse of one of a major bank, Silicon Valley Bank. Okay, so because of this, later on, I'll show you on the charts, but the markets had some crazy volatility. Prices went down, and the US government actually came out and said that they were not going to bail out or help Silicon Valley Bank. All right. So on Friday, Saturday, it's mentioned that it was not going to help bail out Silicon Valley Bank. But just as of today, on Monday itself, the government said it will step in and it will help people get back their deposits and help with giving back the capital that individuals have put in the bank. So because of this, if you go and look at the futures right now, it's actually up. All right, we are back up. It's bullish, and with this, really has caused some volatility in the last couple of days. Right, so really interesting. I wanted to share with you guys, but this is really something that no one could have predicted, and really stirred up the markets in the last couple of days. Okay, so very interesting to see about this because people are talking about how maybe this could be one of the catalysts that could kickstart the next financial crisis as well. Okay, so I'm going to be paying attention to this, seeing how it all unfolds and seeing how the market reacts to this. Okay, so again, like I mentioned, right, with Silicon Valley, just as of yesterday and today, government said that they'll step in and they'll help people with their funds that they deposited as SFB. Okay, so because of this, our futures is up and the markets are back to being a little bit bullish. Okay, now, at the same time this week, job markets also reported its data as well. And very simply, again, payrolls. So again, of a bit of a mixed data that came out. Payrolls actually rose, okay, by 311K. Okay, so more payrolls were created. But unemployment rate went up as well. All right, so unemployment rate went up as well. In January, the number of jobs that was created was actually 517K. And even though right now the amount of jobs created this month has been up as well, it's still a bit of a good news, bad news. So that's why I say it's a little bit of a mixed data because unemployment rate is up, but we still have jobs being created, jobs beating analyst expectations as well. So again, neither here nor there. It's very hard to get a gauge on what this data is all meaning for us. Okay, so yeah, right, job market still stays hot. Was a little bit of a mixed review and mixed response for this. Okay, so let's go ahead and check out the charts and see what actually happened with SPY, with QQQ, and how this whole Silicon Valley Bank event has unfolded and affected the markets. Okay, right. So we are on the SPY charts, S&P 500. These are my 1 year, 1 day chart. And very simply, again, you can see that because of the whole event that's happened with Silicon Valley Bank, we had prices over Thursday and Friday moving down massively for ourselves. So again, I told you guys, if it was bearish, we can expect prices to come to my 392 to 390 levels. And what happened, it actually came down to those levels and it broke those levels, went up all the way to about 385, all right, 384 to 385, right? That's how low it went down to. Now, again, because the reason why this happened is because of the whole Silicon Valley Bank issue, as well as the government saying that they are not going to bail them out. All right. But now on Sunday and today, they have turned around and said they are going to. So right now, if you can take a look at pre-market wise, you see that S&P 500 is up, all right, about 392. So it is back up for itself. Okay. So that's how fast the narrative has changed just in a short period of time. Okay. Now, where can this week possibly go? Again, for this week, if you're unsure where exactly the markets can go, I suggest you sit out and watch first. Okay. Again, if it does continue bearish and we do see it get rejected by my 392 and 390 levels, then prices can possibly come all the way down to 380. Okay, I will not be surprised if that happened. But if it does break above my 392 to 390 levels, then we can possibly see it go all the way to 396. And if it's even bullish, then all the way up to 400. Okay, this is where it can possibly go for the week. So I'm going to be staying peeled, going to be paying attention to this as well, to see how this event unfolds and how it can affect the markets. All right. And because of this whole event, guys, if you go and look at the fear and greed index, okay, the fear and greed index, right now we are at extreme fear. Okay, so little over just a month ago in February, we were at greed. Okay, we were at bullishness. The individuals or investors in the market were bullish. But if you go look at the fear and greed index now, it is extreme fear for itself. Okay, a lot of people are fearful, wondering if they should short the market and how they should go into the markets. Okay, so really this week we got to see how it unfolds and how it all unpacks. Now, for QQQ as well, okay, for QQQ as well, again, it's come down to where I drew my levels and I told you guys, if it is bearish for itself, you'll see it come down all the way to 290, okay, which is where it nicely has stopped. all right, where previously we have stopped as well. If this bearishness does continue, then possibly to 285 and even 281. But if it does hold this level, then we will see it move back up to the 300 price level. Okay, so you can see again, pre-market wise, it's at about 293 because of the news that has come out about the Federal Reserve bailing out and helping depositors get back their money from SVB. Okay, so this is how the charts are doing for this week. And again, continue to watch how the whole event unfolds and if there are any surprises that may start popping out for itself. Okay, so what I'm going to share with you guys now is that in the upcoming week, we also have some major high impact events to look out for. And this could be additional volatility and catalysts in the market. Okay, so I'm going to share it with you guys and stay prepared to see how to position yourselves for this coming week. Okay, so what's happening or what are the events to look out for this week? So again, number one, markets are going back to 9:30 p.m. daylight savings. Okay, so previously we were in 10:30 p.m. Markets have gone back to 9:30 p.m. So again, trading can begin 1 hour earlier for yourself. Okay, and what's going to happen on Tuesday, which is tomorrow, is very simply our CPI data. Okay, so CPI data is coming out. This is going to tell us where inflation is at for ourselves. So very, very important for us to see where it is. Okay, inflation was at about 6.4%. That's why you can see 6.4% over here. Analysts are forecasting that it would have dropped to 6.0%. But let's see what happens. Okay, again, this data that comes out can cause volatility for us in the market. Okay, and Jerome Powell has said that he expects interest rates to stay higher than expected, possibly going to 5.75% because they feel inflation is not being tamed or coming down as expected. Okay, so this is something for us to watch out for. Now, next thing is also PPI data. So PPI is going to be coming out. Okay, producers production index is going to be coming out, and very simply again, it's going to tell you as business owners and businesses how expensive or how much production is affected by inflation. Okay, so if there's rising costs in production, that is usually passed on to the consumers when they sell their products or items. Okay, because if it takes more to produce the item, it's going to be passed on to you and me when we buy the item. It's going to be more expensive. Okay, so let's see how this data comes out as well. This will also cause volatility in the markets. Okay, so while the SVB event is unfolding, we have these two high impact events happening on Tuesday and Wednesday for ourselves. Okay, so it's really important to take note of this and to position yourself safely in this week of trading. Now, despite all of this volatility, guys, okay, our community over here have been doing well. Okay, they've been consistent. And despite an event like last week happening, they are able to still stay profitable for themselves. All right, so just take a look at this, guys. Literally last week, despite all the volatility in the markets, these guys are making some solid returns for themselves. All right, daily returns, you can see in a short period of time, literally half an hour or less. Okay, some guys who are even more proficient are doing this lesser than that, right? 2 minutes in a trade, 4 minutes in a trade, 14, 13 minutes. That's how fast it can move for themselves. Okay, now again, if you look at it, right, some of these guys in 10 minutes making 22%, right? 30 minutes making 6.4%, right? Small wins, small gains for smaller portfolios. 4 minutes making about $57, 7.1%. Okay, so despite the volatility last week, they were still able to trade and make this kind of returns for themselves. Okay, so again, Meta buy call about 19-20% profit for himself. Microsoft puts over here 7 and 5% respectively. Okay, you got Nvidia calls, Tesla, Nvidia, okay, Nvidia, Tesla, Nvidia, Apple calls. Really fantastic returns in this volatile week. Okay, so again, if you want to know how you can do this for ourselves, then please join our free Discord. All right, guys, if you want to know how you can do this for yourselves, join our free Discord. The link is over here, bit.ly/IWC Discord, and the QR code is over here as well. Okay, so this is where I post weekly market review videos, and we also post our trade logs, all right, our trade logs for ourselves that we have taken, so you have full disclosure and you can see how the community results are doing for themselves. Okay, now if let's say you want to see certain trade ideas or certain stocks, all right, where we've done technicals on, all right, certain resources where we've done technical analysis on, then you can go to our Insta as well, bit.ly/IWC Insta, and scan this QR code over here. Okay, so guys, go ahead, take out your phones or for yourselves, scan both of these QR code or copy both the links and join these two groups. All right, join the Discord and join the Telegram. There's a lot of valuable resources that are here for yourself that we post, so please go ahead and join these groups for yourself. Okay, so with that, I've come to the end of my weekly market review video. Again, it's going to be an interesting week up ahead, so again, stay safe guys, trade safe, and I will see you in the next week. All right, take care guys.